Welcome to the program, Shuhbam Chaudaunri, the World Bank Country Director for Nigeria.
Good morning, Nancy. Thank you.
Good morning. I can see you, Shuhbam.
You.
Yes, good to see you too. Okay, let's get started. If you can hear me, the first question is: the Nigerian government is approaching the World Bank for a loan at this time, for some support, let me put it that way, at this time, to help us, mitigate the effects of COVID-19 pandemic. What are your views about this?
So you're absolutely right. We're here, in fact, to support Nigeria at this time of need, as we have been all along in terms of helping Nigeria. As you know, our longer-term mission is to help the government lift Nigerians out of poverty. In terms of the current crisis, it actually, there's a public health side to it, obviously. It's about containing the outbreak of COVID-19 here in Nigeria. But I think one message that we've been saying to everyone, and the government is completely on board with this, is that even if Nigeria contains the outbreak, which I very much hope it will, Nigeria will still face pretty severe shock from the fact that oil prices are where they are because of the global pandemic. As you know, the oil prices have dropped from somewhere in the mid-60s in January to now they're below $30 a barrel. What that means is that Nigeria's, obviously, exports are going to be down, but government finances are going to be critically hit. And because of the exposure of the Nigerian economy to what happens in the oil and gas sector, there will be broader spillover impacts to the rest of the economy. And that's really what we've been focused on, these two prongs of helping the government protect lives by containing the outbreak, but even if that goes well, to actually help protect livelihoods in the face of what is likely to be a severe economic downturn, purely basically translating down from what's happening globally. So there we're supporting the kinds of things we're planning. Obviously, immediate support for containing the outbreak. We had an existing program of support to NCDC, which has about $82 million, which is, we've made clear, is readily available for the frontline responders to get protective equipment, testing gears, set up isolation wards, recruit and train frontline healthcare personnel in helping to contain the outbreak, doing the testing, doing the contact tracing, doing the initial treatment, etc. In addition, the government has asked us for about $100 million from the Global Fast Track Facility to really make sure that Nigeria is prepared in case there's a more widespread outbreak, to put in place mitigation measures, again, on the health front. Now, that's one part of it. This is the protecting lives part of it. But equally important, in some cases, on a much larger scale, we're talking about protecting livelihoods, which means supporting poor and vulnerable households, including the ones who are hardest hit by the economic downturn, including a lockdown. Supporting firms. Most of the Nigerian economy is in the informal sector, micro, small enterprises that are struggling, and that will be struggling if the economy continues to contract. Supporting provision of essential services, because people need food, electricity, basic services. In all of this, what's really important is supporting the government's ability to provide key functions that all governments do. And here, what's really critical is what's happening to government finances. The fact that oil prices have gone down translates directly into shortfall in the revenues that the Federation account receives. Federation account is where both the revenues for the federal government as well as the revenues for state governments come from. And a big part of that are revenues from oil and gas. And if you've heard the Honorable Minister of Finance in recent days, we're expecting probably a shortfall in revenues upwards of 2-3 trillion naira. Part of our focus is how can we help Nigeria fill that immediate financing need so that essential government services can continue, but more importantly, so that the government can take the steps, including this 500 billion naira COVID-19 response fund and other steps to protect livelihoods, to protect lives during this crisis. And we're also separately discussing, at the request of the federal government, a package of support for the states. Because in a federation like Nigeria, one needs both kind of targeted programs, measures by the federal government, but also the states become very important in terms of providing those frontline services to ordinary Nigerians. So we're working at both levels, at the federal level to provide that immediate financing, help fill the financing need and discuss what kinds of pro-poor stimulus programs can be put in place to protect livelihoods. And we're doing something similar at the state level. Nancy, back to you.
Yes. I actually had to listen to you with all what you're saying and how the World Bank is supporting Nigeria at this point. But let me quickly take it from this point. Before the World Bank, before the COVID-19 pandemic struck, how fragile is Nigeria's economy? Because as you're seeing it right now, you were on my show just a few months ago to talk about the fragility of the Nigerian economy and perhaps what we need to do. How do you think that with this COVID-19 and the fragility of the Nigerian economy, how can the economy cope at this point?
Nancy, I think I would be, remiss to say that, look, Nigerian economy is vulnerable. Okay, so you are looking at something that is an unprecedented global shock. And the Nigerian economy is going to face the ripple effects of that global shock on two fronts, as I keep saying. One is purely the COVID-19 pandemic globally and how that's going to translate into, on a public health dimension in terms of the spread of the disease locally. But on top of that, even if that does not, if the government manages to contain the outbreak locally, the fact that the global economy is heading into a major recession this year, I think we are projecting that. The IMF, almost every major institution out there is looking at an unprecedented global recession this year, which means the global economy as a whole is going to contract. In the middle of that, we don't see how Nigeria can avoid a contraction. What will matter is the strength and the speed of the government response in terms of how deep that contraction is. But we are looking at a contraction, and the fact that Nigeria's economy is vulnerable to what happens in oil prices in particular makes the exposure a little bit more direct. So Nigeria was on its way up, recovering from the 2016 recession. And it was, in a solid, probably one would have hoped for a more accelerated recovery. That, unfortunately, is going to be kind of affected by what has happened just in the last 2 months. I mean, that's part of what we need to remember is what has happened is, we think about sudden onset crisis, like a tsunami or an earthquake. This is a sudden onset crisis like none we've seen before, which has come through the spread of the pandemic and what that has done in terms of just shutting down the global economy.
Shuhbam, can you tell me the whole assistance the World Bank is rendering to Nigeria at this point? Because the Minister of Finance in her press conference just some few days ago did say 2.5 billion from the World Bank, 1 billion from African Development Bank, and $3.4 billion from the IMF. So calibrate for me what the total amount that the World Bank is using to support Nigeria at this time. And you understand what I mean?
Yes, yes, absolutely. So let me say what the $2.5 billion is essentially incremental. So if you think about, we already have a program of financing and support that's ongoing and that we're still going to keep at and I can tell you a bit about that, but what the $2.5 billion is essentially the incremental request for support that the government has asked for in the context of helping both the federal and the state governments meet this current crisis and respond to it in a way that protects people. So it's about $1.5 billion we're talking about at the federal level to help provide, meet the financing need of the federal government, and help it put together a package of pro-poor fiscal stimulus measures, COVID-19 response measures. And the remaining $1 billion is basically for the states to help the states take similar measures. And in both cases, part of the discussion around what should be the volumes was driven in part by looking at what is likely to happen in terms of a shortfall in revenues. Okay, so what we did was dimension the financing challenge. If the revenues go down compared to, say, the federal government budget that was approved by the National Assembly, revenues go down at the same time that the need for additional expenditures, both on containing the outbreak and in supporting households, protecting households and livelihoods and small businesses, the need for spending goes up. What does that do to the incremental financing need of government? Similar exercise at the state level. Revenues, the transfers from the federation account will go down, but at the same time, state governments will need to scale up their support for communities. So that's how we arrived at a rough number. This is, just to emphasize again, this is on top of our ongoing program of support, which continues to help finance primary healthcare, basic education, rural roads upgrading. And what we're in fact doing is trying to see how some of those existing programs, if necessary, can also be leveraged as part of the COVID-19 response.
Okay, is there some kind of budgetary support in all of this, or is it part of the $2.5 billion or another source of financing for budgetary support? Because you know that for now, Nigeria is definitely falling short for 2020 budget, $30 oil price range right now, so we can't meet our revenue target. So is there a kind of budgetary support coming in?
Yeah, so the 2.5 billion, the 1.5 billion is in fact direct budgetary support to help the federal government meet its financing needs.
Okay.
As I mentioned, that's a critical part. You know, we have a framework globally that, you know, in most countries about protecting lives, protecting livelihoods, you know, helping essential government functions stay afloat, helping protect jobs, etc. But none of that can happen if the government's finances fall short. So that's essentially, I mean, that we take as our starting point in terms of helping Nigeria, is to help Nigeria meet that financing gap.
Okay, let's talk about, we've seen your sister organization, IMF, give debt service relief to some countries in Africa. Debt service relief, I see, for the initial 6 months to about 19, and they're even doing more for African countries. Is there any discussion around that bit? Because I also know that Nigeria is indebted to the World Bank, to the African Development Bank, the World Bank through the IDA, and I think IDRB and all of that. We are not indebted to the IMF. Is there some kind of conversation going on there? Because we know we are indebted to the World Bank a lot.
Right. So there is, in fact, a conversation. It was discussed both at the G20 finance ministers meeting on Wednesday, and in fact, just in a couple of hours or even less than an hour, it will be a topic of discussion at the meeting of the World Bank and IMF Development Committee. This is as part of our spring meetings. These are being held virtually, and you'll have finance ministers from all around the world. Minister Zainab will be joining that virtually from here. And then after the Development Committee meeting, there's a special meeting of all the African finance ministers, organized jointly by the World Bank. Our President David Malpass will be there, by the IMF, Kristalina will be there, and the African Union. So, and then President Cyril Ramaphosa from South Africa as the chair will also be there. Minister Zainab will also be participating, I believe, in that meeting. So this will be very much part of the discussion. One of the things that we have, I think our institution has made clear, both especially the multilateral financial bank, multilateral development banks like the World Bank, like African Development Bank, our ability to provide concessional finance. I mean, the thing to remember about all of the finance that we provide, the debt, if you like, is that it's highly concessional relative to what Nigeria would be able to borrow in commercial and international capital markets, right? So our ability to provide that concessional finance also depends on our credit rating. and partly because, you know, and so there actually our President David Malpass issued in his remarks to the G20 finance ministers, and then there was a press, which was released to the press, I think on Wednesday, late Wednesday. He made the point that, look, we want to find all ways of helping that we can. The issue right now is, can we think about a debt service moratorium, say, on all the the debt service that, say, Nigeria or other countries owes to the International Development Association, can we do that without risking our ability to provide additional financing? So the approach has been to think about, look, what is the net financing that we can provide in this time of need? So part of that, why is it net? Because yes, there are some debt service flows that come back to the World Bank, but on the other hand, we're providing new financing at this time of need, and our focus has been, how do we maximize that net? If by forgiving the debt, if by putting a moratorium on debt service, we're still able to maintain the gross financing flows to the government, that would be first best. We're not sure that that's possible, given what we've heard so far. But this is something that that will be discussed later this afternoon. Let's see what comes out.
Okay, I think we'll leave it at that, Shuhbam. Thank you for joining me. I'll be taking Michael after you now. Michael would be concentrating. I will ask him questions around macroeconomic policies, structural policies that perhaps we also need to put together. Can we actually put our house in order when there's fire on the roof? So I'll be asking him those questions. Thank you very much.
Okay, I think the most important thing there, there's a time and a place for everything. Right now, it's to put out the fire. Then we can build, do the other parts of the house.
Okay. Thank you, Shuhbam. Thank you for speaking with me. Yeah. All right. I've been speaking with Shuhbam Chaudaunri, the World Bank Country Director for Nigeria. You've been listening to him talk about the discussions going on. I did talk to him about if we will be expecting like a debt service relief from the World Bank, just like we've seen IMF giving debt service relief to some other African countries. Let's quickly take a break. When we come back, Marco Hernandez will be joining me. He's putting out the fire, according to Shuhbam Chaudaunri, the World Bank Country Director that I spoke to just before the break. The World Bank Chief Economist for Nigeria is joining me right now. You can see him on the screen, Marco Hernandez. Hello, Marco. How are you doing?
Good morning, Nancy, and good morning to all Nigeria.
Yes, I just spoke to Shuhbam now, and he gave me an overview of what is happening, the kind of conversations that Nigeria is having right now with the World Bank to help stem this COVID-19 pandemic. Just before we finished the interview, I did speak to him that I'm going to speak to you about the macroeconomic policies and perhaps some of the things we need to do while the fire is still burning our house. What do you think we need to do to put out the fire? First of all, the fire is burning, is raging. What do we need to do?
Yeah, no, well, thank you very much for inviting us to speak today. And I think that from a macroeconomic perspective, Nigeria is very vulnerable to the current global disruption and also the oil shock. The COVID-19 crisis is completely unprecedented, and the way that the authorities react to it and also build a shared vision, not only to address the immediate needs that the situation merits, but also to build the foundations for consensus and reforms going forward, will be very important. I think that we have a lot of lessons that we can gather from the last oil shock of 2015 and 16, when the economy was able to start recovering. Now, however, what has happened is that as the economy started to recover, growth has started to pick up, inflation was coming down, some of the level of macroeconomic indicators were improving. At this time, even before Nigeria was able to get back to its potential, it got hit again by this shock. So I think right now, it will be very important to differentiate between the very immediate and urgent actions that the government will have to take and those that will just build the foundations for the future so that growth can continue to recover later on, that growth would be more inclusive and it will be sustained so that when the next shock comes in, we will be much better prepared. In terms of those immediate actions, I think it would be very important to take into account a few dimensions. On the one hand side, the importance of safeguarding revenues, because as Shuhbam was already highlighting, Nigeria, because it depends a lot on the oil sector, the revenues from the government, and this translates not only to the federal government, also at the state level, have come down significantly because of the shock. So safeguarding the current revenues, ensuring, for example, that there are business continuity plan so that the revenue authorities can continue to collect, while at the same time making it easier for taxpayers that want to contribute to the cost, but also find it very difficult because of the lockdown conditions. So, for instance, making sure that those payments could be transferred through the internet, there are proper procedures in place to collect those taxes, that would be very important. On the other hand is what to do with the very scarce resources that we have as a result of the shock. So here, reprioritizing and redirecting spending would be critical. The authorities are working relentlessly now to amend the budget for 2020 to take into account the new fiscal realities and also see with the renewed envelope what could be done to protect lives as a result of the COVID-19 pandemic in Nigeria, but also protect livelihoods and protect also the future, doing what is needed to make sure that there is value for money in the resources that are being spent, and also ensuring that whatever resources are procured from abroad, for example, as new borrowing that the government will need to mitigate the effects of the crisis, that borrowing be very transparent and also accountable to its citizens. So I think the combination of the revenue and expenditure the dynamics or measures that could be taking place are very important. And one more point is on the financial sector. Something that we learned from the previous recession in 2016 was that because the financial sector is also very much exposed to oil dynamics globally, then it would be very important to establish mechanisms so that the authorities can monitor what's happening in the financial sector and react accordingly. Here, it would be critical to take that into account because, as you know, the shock on global demand is not only affecting consumers, but it's also affecting investors, the small and medium-sized enterprises that would want to get credit so that they can continue their own activities and are finding it quite difficult globally to get financing to those activities, right? So I think that combination of establishing a macroeconomic framework that would take Nigeria faster out of this global situation, then assuring that there's safeguarding of revenues and redirecting spending to the best possible uses, and making sure that there are no risks from the financial sector that materialize. I think that is the urgent need that Nigeria will need to pursue.
Let's stick with that a bit, because Shuhbam told me earlier that there are conversations going on, in fact, the finance minister and all of that. But I want to ask, from your own perspective, do you see the will, especially from our authorities, in terms of taking into cognizance these fiscal realities which we are facing right now and adjusting a lot of things they need to adjust due to the current realities in terms of macroeconomic environment? I hope you understand my question. Yes, in terms of perhaps doing the hard things now, taking the hard decisions that we would have taken earlier to be able to help us navigate through this time.
Thank you, Nancy. And as the old saying goes, we should never waste a good crisis, right? So I think this is an opportunity, as you said, to take bold measures, and more importantly, to make sure that there's a shared vision going forward. What needs to get done now and how to prepare the foundations for the future. So I think in this regard, some of the measures that the government has been taking and is planning to take should be noted. For instance, the government already had taken steps to try to mobilize domestic revenues through the Finance Act of 2019. So that was a very positive step. It would lay the groundwork to make sure that we have now a bit more resources to try to avert or mitigate the impacts of the shock. In the same way, now with the amended budget that the authorities are putting forward to the National Assembly soon, that will be an important step to make sure that there is this redirecting and rationalization of spending at a time when we need to make the most to protect critical development spending. We're talking here about pro-poor expenditures that, once again, could save lives in the context of the pandemic, but also make sure that livelihoods are protected. The Nigerian workers, many of them depend, especially those in urban areas, on the informal sector. And that informal sector, it's a sector that lives on a day by day. So they will be affected by any policy measures that, while they're very important to protect the public health response, for example, the stay in shelter place measures, they would also have unintended consequences on the economy, that if they are taken into account in those responses, then we can see that, we would be able to see a light at the end of the tunnel. So the measures that are now taking place, let me highlight also something more, which we believe that is critical, is when we're talking about redirecting spending, the move that the authority have taken already and has been widely announced on trying to have a more market-driven price for petrol, that would reduce significant under-recoveries that in the past, of course, were limiting quite a bit the potential from the fiscal authorities to use those resources for other critical expenditures. So I think that continuing this type of bold measures and building on what has been done and understanding also from the lessons of the previous recession could definitely be useful as the plan is to move forward and further measures are taken to, on the one hand, make sure that the COVID-19 pandemic is contained within Nigeria, and then also to mitigate the economic effects that are related to it.
Marco, do you think a recession is imminent in Nigeria? If yes, okay, the signals are really there really now. But do you think that a recession is imminent? And if it is yes, can we really avoid a recession even with the COVID-19 pandemic, with some actions from the government? Because if there's a recession now, that would be like 2 recessions in like 4 or 5 years.
Well, I think that if there are measures that are taken in place to contain the economic impacts, I think the impact of the crisis could definitely be mitigated. I'm talking here about the global COVID-19 pandemic. I think it will be hard for Nigeria to escape a recession, given that the entire global economy is expected to go into recession. As Shuhbam already highlighted, the World Bank, the IMF, and other institutions are already projecting an impact that is very, very unique. We haven't seen this type of effects. And if we compare it, for example, to the global financial crisis of 2008 and 2009, the main difference here is that hit a particular sector, the financial sector and the housing market. Whereas here, we're talking about impact directly on the real economy, in addition to other sectors as well. For example, what's happening on oil prices. And that combination is one that we haven't seen. So I think it will be hard for Nigeria to escape a recession, but definitely the pace of the recovery, it's what we're very much paying attention to, because establishing right now measures to mitigate these urgent needs, especially on the fiscal side, and trying to make sure that those resources go to the most adequate places, would help to make sure that there is more consumer confidence and also more investor confidence. That would be very important for later in 2020 and also in 2021 and beyond.
Question for you, Michael. The World Bank is known for its commitment to end poverty. The World Bank has been doing this at least for the past 70 years. In fact, when you have been to the World Bank many times in Washington, D.C., even on the floor, you will see to end poverty, isn't it? Now, we are looking at poverty as well as hunger, as well as saving people from COVID-19 pandemic. What do you have to say in terms of Nigeria's handling getting to the poor and the vulnerable at this time? Because just like we've said, it's about protecting lives, and saving livelihoods at this time. What more can we do? The federal government is coming up with palliatives, some states too coming up with their palliatives. Can we do some things better? What are the things we're doing better? What are the things we're not doing better that we can do better?
Thank you. So I think that when we talk about poverty, one of the main transmissions from the economy to what's happening in terms of levels of poverty is the labor market. So one thing that will be very important is to make sure that we can not only get out of this crisis as fast as possible to create more jobs, but to make sure that the jobs that are created are of better quality. What we know, for example, is that the 2015 and 16 experience shows us that there could be a significant effect in the labor market. What we knew from that period of time is that about 13 more million Nigerians became unemployed as a result of the slowdown of the economy in 2015 and then the recession in 2016, and even because the economy continued to recover, but not as fast to create the many more jobs, taking into account that there are many Nigerians entering the labor market every year. We have about 300,000 more young people entering the labor market every single month. So that's more than 13 million. So more than 3.5 million a year. So taking that into account, I think that ensuring that economic activity remains in place whenever possible, that would be very helpful to make sure that the jobs that are being created now are protected, and there are future ways to create jobs going forward. So for instance, that's why we're saying that if we can mitigate the immediate and urgent needs that are very much necessary right now, and we combine it with building a foundation for structural reforms in the future to ensure that the structural bottlenecks that have impeded, for example, investors to come into the country, for new firms to start their own businesses, to get financing, to be able to grow and compete on an equal basis with other companies. Those are the reforms that right now I think we need to sequence them, right? So we need to take care of the most urgent things now, but make sure that we build that foundation. And this is a great opportunity to make sure that the key stakeholders in charge of making those decisions could get together and establish a plan going forward. I think that the combination of these actions and hopefully also a gradual recovery in the global economy, as we are projecting will come into 2021 and beyond, would be what is needed to ensure that the labor market becomes more dynamic, more people are able to get jobs, more of those jobs to be better paid as well, and that will result into lower levels of poverty. And in this regard, we're trying to be helpful to the extent possible. With the authorities have a very ambitious target of lifting 100 million people out of poverty over the next decade. Now, the situation, of course, becomes somewhat more challenging as a result of this global pandemic, but we are conscious that with the right approach, those targets, those ambitious targets, can be achieved.
Very much, Marco, for joining me today on the program. Thank you very much. I know you have to run along for another meeting. Thank you very much. Hope to talk to you soon.
Thank you very much.
All right.
Thank you. Bye.
Okay.